Winter's almost over, and as temperatures rise, so does the market. And we're going to talk about that right now on another edition of What's Up or Down with the Market. Hey everyone, Dennis here with the Dennis Tuttle Real Estate team, and excited to talk to you about what's happening in the market. Is the market crashing? Keep getting that question. No. Prices are actually at $352,000 is the median home price, and that's up 3.5% over last January. So we have yet to see a year-over-year number that has been less than the year before. Month over month, yes, we've seen a decline, but that's normal every year, even in the best crazy rising markets. That happens, but year over year, we are still positive 3.5% January over January. And it's going to be interesting to see if we have the same climb this summer as we did last summer. So the jury's still out. We're going to keep you posted on that. But I wanted to bring another number to you that's a little bit more interesting, and that is inventory. So inventory actually came down from about 3 months, a few months ago, down to 2.5, which has been kind of the number we've been hanging out with. And to remind you on that, a seller's market is anything 5 months or less. So at 2.5 months, we could double the amount of homes for sale right now and still be in a seller's market. Although it may not feel like it, because we came from like 2 weeks supply of homes to now 2.5 months supply of homes. So it definitely feels slower. In fact, the average median actually days on market is 39 days. And it was like 7-8 days. So it does feel a lot slower, but 39 days median days on market is not bad at all. Now inventory dropped, but that's not because we took less listings. New listings were up 11.8%. So we took more listings on the market last month, and yet inventory still came down, which means more people are starting to buy homes. Interest rates dipped a little bit, and so that definitely helped. But here's the interesting thing with inventory. New construction, new homes being built, the inventory for a new construction home right now is 5.3 months. So over double than what it is on the average. So if we separated this out, resale homes are at 2 months supply, new builds are 5.3, and there are 101% more new build listings this January than there was last January. So there's some challenges and opportunities in this number. The challenge I'm going to get to in a second. The opportunity is if you're buying a home, new construction's a really great option right now because they're paying for your closing costs. A lot of them are. They're also paying money to help buy down your interest rate, or they're just offering a lower interest rate than you can get out in the open market. But if new construction is not your thing, we can still get rate buy downs and things to help lower that monthly payment and help out on that. So, but new construction, I mean, they're literally giving away as much as they can, and the kitchen sink, obviously. Here's the challenge. The challenge is the average home, new construction is around $500,000. So that's kind of what we're seeing as an average price right now for new construction. So if you have a listing or a home for sale that's $400,000, $500,000, $600,000, and there's a lot of new construction around you, well, you're competing with that new construction, and they're offering incentives that are almost hard to compete with right now. And with them having 5.3 months supply of homes, it's going to be a few more months. We don't really know how long it's going to take before they get down to a point where they don't have to give away everything in the kitchen sink to sell a house. And so you could offer some things like rate buy downs, closing cost, all of that. And you might be thinking, well, the new construction's more expensive. Yeah, it is. But when you look at the monthly payment, you could actually spend a little more on new construction, but your payment be lower because of the introductory interest rates. So it was really fascinating to see how much more inventory they had in new construction and how that's impacting the market as a whole. And if you're in the upper prices, there was like 9 months inventory in some areas that I looked in that were in the $500,000, $600,000, $700,000 range. And so they're technically in a buyer's market with new construction. But that's temporary. That's not going to last. They're going to keep pushing this inventory that they got stuck with when people that put a house under contract, let's say last March at 3% interest rates, well, when rates jumped to 6%, they no longer could buy that home. So who got stuck with it? The builder. So the builders got all this extra inventory, but it won't last. They will get all of that back out on the market, all of that sold, and we'll be back to normal. Last thing I'm going to say is if interest rates drop at all, right now we're in the low 6s, but I think if interest rates get back into the 5s, we're going to see inventory drop again, and we might see another run up on prices. There's no way to guarantee that. It's just an observation, a thought, maybe a little bit of a prediction. We could also see it flip the other way as well. If rates go up, things could slow down even more. So nobody could tell you. If they do, they're guessing. But it's very interesting to see kind of how we're on the fence with that right now. But rates dropped just a little bit, and buyers started getting out in the market a little bit more. So things we're going to watch. So that's what's up, what's down with the market. Hope it was valuable to you, and we'll be back next month to give you another take of what we're seeing happening in the real estate